Hello and welcome. Thanks for joining us. This is Business Incorporated. I am Bo Sinemafaye. We're live to you from Lagos, Channels Television Global Headquarters. On the show this afternoon, Nigeria's January inflation now at 18.72%. And Africa's second largest economy, the South Africa, also reporting headline consumer inflation, however, on the downside to 6.6% year-on-year in the month of January 2017. Meantime, Royal Dutch Shell and ENI ask a Nigerian court to lift a temporary forfeiture of a long-disputed Malabu oil field. Now we'll get started for the next 30 minutes, and we're starting with a story in about an hour ago. Nigeria's inflation figure for the month of January up to 18.72% year-on-year, beating analyst forecast. The figure is 0.17 percentage points higher from the 18.55% recorded in December of 2016. Data from the Bureau of Statistics show that the food index increased by 17.82%, up by 0.43% points from the rate posted last December. The urban inflation rose to 20.31%, while the rural index increased to 17.34%. This is one story that everyone will be chewing over in the next couple of days. So let's get a sense of where we are right now with the Chief Executive Officer at Financial Derivatives Company Limited, Mr. Bismarck. His company had actually a forecast that inflation would trend higher, but let's get a bit of a sense and perspectives. Let him put his latest numbers from the NBS into some context for us. Mr. Rwani, good afternoon. It's good to see you. Okay, so we'll try to get him back. You saw him have a bit of a freeze there in the Skype connection. We'll get back to that story, but very important to remind you that what research analysts at Financial Derivatives actually estimated was a relatively flat movement in the January inflation, headline inflation, from 18.6% to 18.6% from 18.55% previous. We're going to get Bismarck back on the line for that. Meantime, South Africa's headline consumer inflation slowed to 6.6% year-on-year last month from 6.8% last December. On a month-on-month basis, inflation was higher 0.6% from 0.4% previously. Core inflation, which excludes the prices of food, non-alcoholic beverages, petrol and energy, fell to 5.5% year-on-year last month from 5.9%, and edged lower to 0.3% on a month-on-month basis from 0.5%. And keeping with inflation reports coming out, we're sticking with the West Africa, where consumer price inflation in Ivory Coast, the world's largest cocoa producer, rose to 1.1% year-on-year in January, up from a deflation of 0.2% last December, according to data from the National Statistics Institute on Tuesday. The monthly report showed food and soft drinks prices in the world's top cocoa grower added 2.4% year-on-year, while housing and utilities prices climbed 1.8% and transport costs down 2.2%. So how are the markets shaping up? This midweek trading is all negative for the three major markets on the continent. Nigerian stock market now down about 0.27%. The All-Share Index is down about 12 o'clock midday Nigerian time. That's about 0.02. In the negative territory, that's sinking a little bit further now to about 0.2%. The South African GSE is also in the red, about 0.24%, tracking Nigeria. That's slightly better earlier in the day, but you can see now it's about, we're heading to 2 o'clock here, and I just heading to about 3 o'clock in South Africa. The market here has about an hour to go over there. So the GSE group, the All-Share Index 452 midday Nigeria. Egyptian market, the EGX 30 index is shaved about 0.5% midday, but now about 0.46%. Less than 10 minutes ago on a delayed data transmission. Meantime, the Kenyan market finished Tuesday in the red, 0.13, 124.95 index reading. Quite a bit of a tepid trading day across the continent. But check through with the GCC market, called the Middle Eastern markets, edged up intraday Wednesday with construction firm Arab Tech beginning to stabilize in Dubai. Look at the Abu Dhabi market, 0.87%. Lunchtime in Nigeria. The Dubai financial market reading 36.45. That's about 0.2% in the red. The Qatar Stock Exchange holding on to the 10,700 by about 0.8, and the Saudi Tadawul market at 70.48.99. We're going to cross to Europe, but let's stick with Nigerian markets and get a bit of a sense of the latest inflation data about an hour and a half ago from Bismarck, who is the Chief Executive Officer at Financial Derivatives Company. Mr. Rwane, good afternoon. Thanks for coming through on the program.
Hello, good afternoon.
Thank you. It's good to see you. Is this number, the general inflation figure, is it consistent with your views as an economist?
Yes, it is consistent, and what you need to do is to decompose the numbers. The headline inflation actually went up by 0.17%, which is high by all standards. But if you look at it, the core inflation actually declined, and food inflation actually also declined. Month-on-month inflation declined to 1.01%. And when you look at the food basket, what affected it most was bread, cereals, meat, fish, and fruits, and tubers. So all of these 6 items are affected. Only 2 are exchange rate sensitive. So the dollar value affected the bread and affected the cereals. All the others are not, they are not what they call exchange rate sensitive transactions. So what does this mean? It means that if you look at the month-on-month inflation declining, if you look at core inflation declining and food items, major categories, bread and cereals, the price of bread has actually come down this month. Flour has come down from 11,500 to 10,500 thanks to the Dangote Group flour, which have actually brought down prices. So we are going to see that trending in that direction. One major variable also is the fact that money supply, M1, has been growing rapidly. There's been a lot of intervention money. There's been a lot of printing of money, both at the fiscal level and more so by the central bank